Hello, followers of the 4-year journey. This is Bob Lucas here on January 10th, 2023. I hope you're all doing really well and welcome to another update in the 4-year cycle. I think this is going to be a special one. Before we get into that, it's actually just a few days short of the 4-year anniversary of the first video published on YouTube. That video, in fact, was recorded in early December, just before the final move down to the low. But it's just great that you're here with us or with me over this 4 years and looking forward, hopefully another 4 years to come for the completion of what I think is a cycle that has just begun. That's right. I think we are now in a new 4-year cycle. I'm going to cover why I think that's the case. Also going to cover the buy I did today. So I purchased my final tranche of Bitcoin this morning, and I've updated the model portfolio for you. There's a link in the video to that portfolio, and that completes the full allocation again of the model portfolio. I'm also going to talk a little bit about the fact that we are investors in this journey. We're not traders. So it's important to look at positions, the market, price action from a long time frame perspective and not from a short time frame. It's when you look at it from a short perspective that you end up getting yourself into a lot of trouble and making decisions that go against the objective of investing and a long-term view. And then I'll take a quick little peek at what the next cycle, or the current cycle, if this is a new cycle, what that might actually look like. So beginning with the new 4-year cycle, yes, I'm going out on a little bit of a limb here to say that we're in a new cycle. And that's not me trying to predict a bottom. In fact, I'm going to talk a little bit about how, as investors, we really don't want to be predicting or looking to predict absolute lows or absolute highs. It's a very difficult game that's really for traders and not investors. But that said, we are now currently sitting on 49 months since the December 2018 lows. We have a wick, a low on month 47. It is, in my opinion now, that we have begun a new 4-year cycle, which, if it stands today, would actually, in my opinion, be marked here on month 49. There are reasons for that that are more technical in nature, but in general, I believe we've now started a new 4-year cycle that will probably take time to build a base, to build some momentum, to exhaust all the final sellers, and to encourage new capital to begin to come into this market to lift it higher. So just like we saw in the last sort of cycle where it took sort of 4 months to get out, but more importantly, in the 15 cycle, it took around 6 or 7 months to really get off the ground. We've had obviously a lot of significant contagion, a lot of fraud, a lot of failures in this space. So a lot of capital, a lot of big capital has been lost and burned, and it's going to take time for trust to be rebuilt. But that is the nature of any cycle. Cycles in general are an ebb and flow, and out of the ashes rises a new cycle. And this is what what we're going to have to be patient with now, I think, over the next 6 months, where the cycle tries to rebuild and a foundation is built upon which the next cycle can begin to gain momentum and drive itself higher. Looking just quickly at the weekly chart, obviously we've had this bear market downtrend since the peak, or the double top, in November of 2021. It's been fairly consistent decline down with 3 significant liquidation events, and 3 significant liquidations or capitulations in a bear market is pretty significant, and another reason why I believe we could well be already started a new 4-year cycle. So some of you, or many of you, are sort of looking or thinking about this and saying, well, how the hell could we bottom? We've got so much out there that's gone wrong, that could go wrong, that the macro looks horrible, that interest rates may go higher than expected, and inflation can continue to run higher, that the Fed may continue to tighten rates more than expected. We've got digital currency group and Genesis that's still kind of lingering out there, and and maybe there's some more regulation or heavy regulation coming and the stock market may go down. Yes, I get it. There's plenty of reasons why the market could still fall. But let me tell you, markets are an extremely good and efficient predictor of price, and they tend to price in a lot of these events well in advance and well before they become a thought in your mind and a narrative that you begin to build. Perma bulls, they never sell a top because they're always looking for that next move higher. They believe in the narrative to a point where they never see the top. And it's the same process in reverse, where perma bears in this type of market always see another reason for the market to head lower. I think the reality is that when you're deep in a bear market, the glass always appears to be half empty, right? There's fears and concerns, gives you reason to be bearish, and we end up just naturally looking for any narrative that is negative that goes along with our experience, our most recent experience. And it's self-fulfilling in so many ways, and especially as we are more connected digitally, socially, those narratives just really take on a life of themselves. And that's exactly what we've experienced more recently, just like we experienced at the top with all those super cycle kind of narratives. The same again is playing out now in reverse. But like I said to begin, I'm not here to pick a bottom and be able to come back to you later in many months or years and say, look, on January 10th, I picked an absolute bottom. It just doesn't work that way, or shouldn't work that way when you invest. So nothing I say here is an absolute. It's not an absolute prediction. It's me just basically saying from a long-term perspective. So when I'm looking to add capital, which means when I'm looking to risk my capital on a long-term basis, that position, that strategy is on the idea that over the next 2 to 3 years, Bitcoin's going to be higher. And I don't know where it's going to end up. If it only manages in a left translation or left translated cycle to follow 40,000, that's still a significant improvement or appreciation from the entry today. Or if it can mirror prior cycles, it could make a run obviously to all-time highs, and then this time around into that six-figure range. And when I have that type of view, and when I take a position knowing that I'm disciplined enough to hold it for that duration, then it doesn't make a whole lot of difference whether I end up buying that at 17,000 or 14 or 12 or 13. That may come in the next week or the next month. Okay, I'm making the decision that now that so much time has elapsed and we've gone through multiple liquidations and capitulations, that sentiment is such that tells me that this historically should be a good place to buy. That's the reason why, if you see the model portfolio here, this morning I added to the portfolio 7 BTC, which just essentially represents whatever capital was left over from the sales that occurred in December 2020 and February 2022. So the initial $100,000 model allocation has been reused. So the risk in total for this portfolio is the initial $100,000 outlay. The only difference now is that where we started with 25 BTC in the model, we're now holding 42 BTC. So we've gone through an entire cycle and we've managed to increase our allocation from 25 to 42, but we're also holding that allocation at an average price of not much above $2,000. And that means we've also increased the current sort of paper profit of this allocation, but also increased the physical Bitcoin that we hold. And this goes back to an argument I think many were making years ago, essentially, is why you're trying to trade around when you should just hodl. And that's where I think that's, I guess, the goal of this journey, is that we're not trading, but we're making just some strategic buys and sells, not trying to time tops and bottoms perfectly, but just taking strategic positions and changing allocations that still kind of have a HODL framework behind it. So it's long-term changes, allocations, giving us long periods, possibly even a year plus, without even making any real changes. Over the 4 years since the first video, and here's the first allocation, there's only been 6 actions. So 6 actions over 4 years. So I try and balance the short-term trader with versus the hodler, and say, well, you can be a long-term holder, a long-term believer, and just make few strategic purchases that, if done correctly, and it could have been done a whole lot better, of course, but if done well enough, you can end up increasing your stack and decreasing your overall purchase price as a result, or average price. So this is not a prediction, it's simply just saying that the possibility over the next 6 months and a year that price is going to move higher versus it moving lower has been skewed enough to the point where it warrants adding that allocation. Now, for me personally, that allocation is still relatively a small amount to net worth, and that allows me to take the position and, I guess, sleep comfortably at night. I know I like to use that term quite a bit, but just be in a position where I don't have to respond or get concerned with volatility, especially because when you buy at these sort of extreme levels or extreme lows or near bear market lows, it certainly affords you that luxury into the future. So it's more of a possibility. It's not a it's not a prediction in any way. So why not wait then? Why not wait for that that sort of ultimate confirmation? Or what if Bitcoin can get down to 12 or 13,000, like so many seem to believe is going to happen? Why not sort of save yourself for that possibility? Well, the reason is that we just don't know if it is going to get down there first. And I've been very patient waiting to go as deep as possible into this 4-year cycle, and it just hasn't wanted to break down. It just feels as if sellers are becoming more and more exhausted and buyers seem to be stepping in. I can't rule out the possibility that we drop down, and that's fine with me if it does. Perfectly fine. In fact, if you go back to the first 4-year cycle video, that purchase occurred right here in December at around 3,700. And I was even mindful to say that I don't know if the lows are absolutely in, but I believe what I said along the lines of, at that time, that we're close enough after an 85 or 83% decline over a 12-month period, getting very close to a 4-year cycle timing, that it was enough for me. It was enough to take a position because I knew I had the ability and the patience to wait for the next cycle to unfold. And in fact, we did drop another 20% down to just close to 3,000. And another 20% decline from this level would get us down to around about 13, maybe 14,000, and that could happen. But ultimately, if you believe that Bitcoin's going to be up around 40, 50, maybe all-time highs, maybe 6 figures in the next cycle, that gap there, although would it be great to capture, is really not going to matter, like it didn't matter in the prior cycle. And that's ultimately the difference between a trader who's looking at intraday or the daily, or what's going to happen over or could happen over the next week or two, to the long-term investor, right? I want to be as close as possible to a hodler, but I want to make strategic buys and sells that increase that stack over time. So this is one of those sort of situations, to quote sort of Warren Buffett, for example, be greedy when others are fearful. Well, everyone's been fearful for quite some time now. And I like buying when a lot of people are afraid the market's going to move lower, or when the market is down some almost 80%, altcoins down, most of them 90% plus, 95, 98. And also, let's not forget, a lot of these coins are down, but a lot of people have capital tied up in bankrupt entities that they may not see back. So there's been a lot of hurt and a lot of cleansing in this cycle that's also not specifically represented in a lot of the prices of these assets. So we're close enough. That's the point, the overarching point here. We're close enough. You can't go looking as an investor, as a long-term holder, to bottom ticker buy in a bear market. I mean, it's wonderful if you can do it. It just never happens, really. It's not feasible. And the reason it's not feasible is if you go looking for it, what ends up happening is you'll never get it and the market will reverse on you. And before you know it, you could be locked out of getting your position. And locked out just like so many were locked out in 2019. If you go back and look at a daily chart of that period, here it is here, and you look at the 60-day cycles, and I don't like to talk about such short-term cycles on this series, but it's important. These 60-day cycles, when we had that drop in December, then we had that sort of higher low, then we had this sort of double top, and then on day 47, just short of, well short of a 60-day cycle, it came up to this point here in April, and everybody, well, not everybody, but so many people were looking for this to roll over and make a move down to test those lows and maybe even make deeper lows. We had that bear market mentality, that bear market fear was still prevalent throughout the space. And then you had this massive volume event where Bitcoin went from 4,100 to within a couple days to 5,300. That's a 20% lockout. So many were waiting to get their position, didn't get it, and then thought, well, it's going to retrace this breakout, right? And it just went sideways and trended higher. And then just another 3 or 4 weeks later, from April 19th at 5,000, within 3 or 4 weeks, it was at 8,000. So I don't think we're going to get something similar to that, but we could. And if you don't have an established position that you're comfortable with, then you're going to be constantly waiting for a pullback that just never comes. And if that were to happen, or something similar were to happen here, Bitcoin could be back at 24,000 before you know it. And if you don't have your allocation that you're looking to obtain, you may be just waiting and waiting for a pullback that never comes. And before you know it, what if Bitcoin's back at 31? Again, not a prediction, not expecting it necessarily, but Bitcoin has a habit, has had a history of surprising, of volatility, and we're in a very, very low volatility event or environment right now. And typically in such very low vol events for Bitcoin, you'll get at some point an explosion in price. And of course that explosion in price may come to the downside, but if it came to the upside, there is so much potential short covering interest and then sideline buyers that can chase this market to significant levels. And we could have a situation like we had back in that early 4-year cycle, that you get a big run up and everybody eventually capitulates and buys. Then you get a massive retrace all the way back down. Multiple paths Bitcoin can take, but I'm at the point here where I simply want to say this is a great price as far as I'm concerned. It's come down over a long period of time. So I've got time working with me. I've got the price retracement from the top working with me. We have sentiment working with us. We have the 4-year cycle timing working with us. So as far as I'm concerned, as an investor who's willing to wait a couple more years for the next possible reduction in allocation, this is an opportune time to be buying. It's pretty simple in the end. In a market, in an asset class that over a long period of time has been appreciating, just buying low will serve well, right? That was a buy right there. There was a buy in September. If I can get this to move. So there was a buy in September. There was a buy here at the capitulation low, and that was it. 3 lows, 3 buys, and then a sell up here at 28, which was planned, which was intended to get back the initial investment. and then there was a sell here at that 43,000 level when that 10-month moving average was lost. And again, in hindsight, as I've shared before, more should have been sold at that point. And now there is another buy that occurred. I don't know why I have trouble pulling this off, but one here in June at those lows, and then of course this final tranche allocated today, which I believe these, in hindsight, in years to come, will represent close to, maybe not the absolute lows as I shared, but close to the lows as possible. So what does this next cycle potentially look like? Of course, again, assuming that we've made that low, and if we haven't, we'll make that low soon enough and we'll begin the next cycle. What does this next cycle potentially look like? Well, this is something that we'll have to wait and see how it unfolds mostly. If you watch that first video from December of 2018, I actually introduced in the very first video the idea of a possible left translated cycle that would come not in this cycle, but the one to follow. I said I thought we had at least one more cycle that mirrored the prior ones, but that the fourth cycle, representing 16-year block, could be left translated. And what that means is, if you look at these red candles, they illustrate the months from the low to the top. And in each case, it was 33 months, 35, and 35 months to a top. Very consistent. That resulted in roughly 12 to 14, or actually around about 14 months consistently in the declining or bear phase of these 4-year cycles. And everybody's looking at these cycles now, especially that they're talked about so much, and projecting forward again something similar. And looking at something like this and saying, well, you know, I think we could mirror what we've always done and make a run up to 200,000. And I think I learned my lesson from the last cycle in talking about price a little too much, and should have maybe just continued to focus on time. From a timing standpoint, even from that very first video, the idea that we would top around this time frame and bottom around this time frame was exactly what I presented back then, although presenting a much higher potential price target. Don't want to talk about that more so, not because the last cycle didn't make 6 figures, but more importantly because, as I introduced in that first video 4 years ago, we now had 3 right translated cycles. The top occurred well past the midpoint. That it stands to reason that there's a reasonable chance that this 4-year cycle will top in what's called left translated, meaning that we don't top around month 33 or 34, that we top before the midpoint. If the midpoint is 24 months, then possibly a 22-month top or a 20-month top, or even maybe slightly beyond the midpoint, around 26 months. I know that doesn't really gel with the halving narrative, but many of you who have followed along know that I don't believe the halving has any impact on price. I know that it's a contentious sort of position, and many of you also don't believe or would agree with that, but I do. I believe that the supply of Bitcoin is known and it's factored in from the beginning, and it's really a demand story. And that's why I believe some prominent influencers, let's call them, online have been very wrong on this, talking about supply and not talking about demand. So I think there's a reasonable chance that we can form a left translated cycle in this cycle to come. And there's also a chance that in that case that we don't make a new high in this 4-year cycle, that we spend this next 4 years, I wouldn't call it going sideways, although when you kind of zoom out in the future, it may look a lot like that. Plenty of movement can occur in the 4-year period, but there's a possibility that this next cycle does form left translated. Or if it does, and let's just call it 22 months. And if we go out sort of 22 months from here, we're looking at sort of that November 24 time frame for a possible high. Now, we don't know where that price can come from. So we could have a situation where we could be looking at a fast move up and a blow off top that occurs early. So could you imagine what would happen if we made an all-time high by October of 2024, still well short of that 3-year rising period that we're so accustomed to seeing? The super cycle narratives at that point would be so intense, it just wouldn't be funny, really. So, Bitcoin could be setting up here for a 4-year cycle that could really surprise, and certainly one that can change character. And that's something we're going to have to be mindful of. So the strategy, the reason why I point this out is there's really no way of predicting this, and there's no point in setting your trading or your let's call it your investing strategy now based on where this cycle may peak. Okay, it's probably going to peak within this wide window of 22 to 35 months, and from a price of 40,000 to 200,000. If you think about it, that's not predicting anything, right? And the point is you can't predict it. You just can't. All you can do is buy low and then try your best to cash in on the allocation where the market tells us is the best time to do that. So this next 4-year cycle will be more of a hands-on approach to where we could be looking at possibly cutting exposure, not because we love fiat as everybody likes to talk about, or that we don't like Bitcoin, but only because we want to stack more Bitcoin over the years and over the cycle. We want to be able to, in 4 years' time, be able to sell a reasonable or significant amount, always holding some, when the market tells us we should be doing that, and then wherever this next 4-year cycle low forms from a price standpoint, I do believe from a time perspective it would be around this area. But wherever it forms, we want to be able to then buy again, and where we now start this cycle with 42 Bitcoin in a model portfolio, we want to have 80 Bitcoin. And 80 Bitcoin with the initial $100,000 model allocation from 2018. And that to me serves that long-term investing and HODL objective, but at the same time making right decisions that are not about timing, but not timing to the day and the week, but the right decisions at the right time to increase that stack. So as we start this new 4-year cycle, I'm excited to be part of it. I did sort of say numerous times throughout the last 4 years that this would only be a one cycle kind of journey, but it's been fun. It's been an experience. It's been a learning process as well. As far as I'm concerned, you're always learning, no matter how long you've been studying or working on a discipline. The learning never ends, and it's up to us. It's important that we embrace that and understand that we will never get everything perfect, and we want to learn from those experiences, and we want to take those experiences into the next cycle. And for you specifically, you may not have had the same result as possibly I did, or you maybe had a better result, possibly a worse result, but that's okay, right? Because you have now got a reset opportunity, a time to begin again, and to use that experience to be able to execute better. And it won't be perfect, but to execute better. Many of you got in during this 2017 run, okay? That brought in a lot of entrants to this space. So you had a lot of paper gains for a few months, and then saw it all evaporate and maybe got wiped out completely. And then in this cycle, we started, or you started thinking, well, you've learned quite a bit, and you did fairly well, or you did okay. But now you're geared, and you're prepared with a lot more experience to execute better and to work with that experience to make this cycle better than the past. All right, and these cycle lows, these ebb and flows, reset points where we're going to mint a whole new set of entrants. This last move here minted a whole bunch. They're all out. All these class of cycle 2018 to 2022 have lost, and that's what happens. That's how they get exposed, and they will come back when price is higher. They will flood back in when Bitcoin's at 26, 27, 28, and they will become what many of you possibly were during this cycle where you got back in. So it's that ebb and flow of entrance into the space that drives markets higher, and I'm excited to be part of the journey with you again in the next 4-year cycle. I want to wish you all the very best and good luck, and watch your positions. Treat it as an investment, as a long-term move. Ignore the day-to-day volatility, ignore the price swings, ignore the headlines. Have a position that is reasonably sized so you can withstand that volatility. Do not use leverage. Do not give your coin out to an exchange. Learn to self-custody securely your coins. Do not loan it out. Do not look for 4 and 5% interest on a position we're looking to double and triple and quadruple over cycles. Okay? Learn to understand that Bitcoin is a self-bearer asset, and you'll do fine in the end. All the best, everybody. Thanks for being here.